I'm Corbett Wall with DV Auction, here with your feeder flash for Thursday, November the 8th, and boy, a disappointing day in your cash market on feeder cattle and calves on Wednesday. Just really disappointing, and we've had a complexion change on this market here this fall. It's not getting anywhere near where a lot of us had thought, and not just me, but a lot of other analysts, a lot of people within the industry thought that this market had some legs, but things are just really changing a lot here, and it's causing me to want to get up on my soapbox. But I'm giving you the opportunity to turn this off if you'd like. But I think it has a lot to do with the way that your packers are feeding their own cattle now. And I know we're not supposed to say anything about packers owning and feeding cattle, but they owned and fed cattle forever. And actually, I think it was better when they owned the feedlot straight out. Whenever JBS owned Five Rivers feedlot, or whenever Montford owned Montford Feeding, and then what are those same feedlots that are Five Rivers, and then more addition to them to make up a million head capacity. When they owned those, and whenever Cargill owned Caprock Feeders, and some of your others were more involved. Well, they'd push for some good cattle once in a while. They'd go out and push and market on some good cattle. They didn't buy all good cattle. They filled in with some average cattle here and there, and bought some plainer cattle too. But they did get out and push for some of those good cattle because they wanted some of those really top kind of cattle. And also they wanted those the feeding enterprise to make a little money once in a while. They didn't want to always have to rob out of their what they were making in the plant to pay off the feedlots and how the feeding operation was going. So they'd let the feedlot operation make a little bit of money once in a while, and then to kind of just spread it over a little bit, and it let some other people that weren't included in that or weren't aligned with the packer, it let them breathe from time to time. But in the last few years, we've gotten to the point where all that the packers decided, why do we need to spend all this capital feeding these cattle? We'll just sell it to a big investor group or somebody that's in the business and let them handle all the money that it takes to feed cattle. And there's always people out there that's got a lot of money overseas or offshore that's more than willing to loan the money to cattle if they hedge them up here. Now, we all know that feeding cattle is a poor investment, but if you can feed 1 million of them and you hedge them all, and you know you're going to have some basis there, then it gets to be a pretty safe investment. And that's what we've seen. And we've seen the turnover of all that feeding capacity go directly from the packers to other outfits that feed for them. Of course, all the cattle that come out of those feedlots are going to go to that same packer. So the packer doesn't need to spend all that capital feeding cattle when they know they've got the same numbers coming to them, and they've got the same percentage of their needs met, and they have a small percentage, usually less than 20%, that they have to go out and pick around and buy off individuals. But the outfits that have taken off over all that feeding capacity, they're not out pushing for the best cattle. They're picking up plainer cattle in big bunches and different places. It makes you wonder where they're getting all those cattle. They're not in the sales at the same level as what we used to see. They're not in the country at the same level we used to see. They're not on the videos at the same level they used to be. They can't get them all from Mexico, but they're getting cattle in big slugs, just plainer average cut cattle, different places, and they're getting them in there somehow, but they're not pushing on the market. It's not helping our calf market, especially this time of year whenever our markets are flooded with calves. They're not out there pushing on the best doing yearlings. The guys you see doing that are the very few independent but a lot large commercial feedlots that are pushing on those best doing cattle, the ones that'll gain 5 pounds a day, the ones you can hang 1,600 pounds on and feed your way into a profit on those cattle. Those are the guys that are doing that. Those are the old school guys that are still feeding cattle and trying to do it efficient. But those guys cannot risk feeding on the open or selling on the negotiated market anymore like they used to. They won't let them live, so they have to get into some type of an arrangement, not just with one packer, but maybe several, with some kickers here and there, maybe on the volume that they're selling, maybe on some of those better quality cattle that they have, and just some way that they can live to keep in operation there. And they're having to do that. So those are the guys that are pushing on the best cattle. Then you've got some few independent farmer feeders, guys that just handle a few loads a year there, and they like to buy those really good cattle too. Now we are seeing some of those regional packers come to them for some of those best cattle and giving them enough premium to live there. But for the most part, we're just not seeing the market do anything. And your big outfits that are aligned with the packer, that are just living on the basis, that got everything hedged up to the gills, that just puts so much pressure on our board, undue pressure on our board with all that hedging pressure. We know we don't get much industry long or support on the board. All we get is some fund management money and speculators getting in there. And it's so much easier for them to get in on the short side and push the board down than it is to build it back up. And so that's why we just always see pressure, pressure, pressure on the board and hardly ever see anything going up. We don't see any packers long hedging for fat cattle. We only see a few farmer feeders long hedging on the feeder contracts, so we don't get very much support there. And it's just really a frustrating thing, and it gets into a time like right now where we've got plenty of supplies of calves and feeder cattle, and the market is really tough. And I don't know at what point we're going to get back up there, because by the time we get through with these calves, these feedlots are going to be so jam-packed full that they're not going to be hungry for cattle again for quite a while, and some of your big outfits will have a lot of cattle turned out that will be coming back in be ready to come back into feedlots in the spring, and it's really just doused the opportunities for the market to come back. And now we're seeing our packers come in, and after they've led all of the guys that are feeding cattle into making these huge cattle to take care of any supply problems that they might have, then they want to come in from time to time and just and put in big penalties on heavy carcasses, and we're starting to see that right now. Just anything to get these cattle bought cheaper. We've talked about all the ploys that they've done over the last several months here, hauling cattle $4 or $5 a hundred away to keep from adding a buck onto the market. Just anything that they can do to keep the market down. Well, they don't care if guys make money feeding cattle anymore, because they're not feeding cattle. Your big outfits that are aligned with the packers, they don't really care what the market is, because they're just going to buy cattle that they can hedge, so they're buying the second cut. They're not getting in on those high dollar cattle. They're not pushing the market any higher. They are just buying whatever they can hedge, whatever kind of cattle they are. They're living off the basis. They would just about as soon the market be 70 or 80 cents as they would $1.60 or 70, because it doesn't take near as much money to operate that way. And then we've got all of the sheep, the guys that are just following each other, trying to fight them off, and it's an unfair fight. And it's just rapidly moving this cattle industry, this commercial cattle feeding industry, faster and faster to the hogs, or even worse, the lambs. And you remember they used to talk about the lambification of the cattle feeding business, and that's what we're seeing. It just doesn't look very far over the horizon to me that they'll eventually rub everybody out. and it'll just be kind of like the hog industry, where you got a few big outfits. They own all the slaughter facility, they own all the feeding facility, and anybody that wants to handle cattle or will just be a contractor for them. I know it's disappointing, guys, but if you just take a look at it, it looks like it's a lot closer than what we even feared. But enough about that. We'll talk about the board for a while. Your December live cattle futures up 67 cents. Just some support there on the spot month because everything else was lower. But ended the day on Wednesday at 116.10. February down 80 cents at 119.60, and all of your out fronts were lower. We no longer have a premium on our out front markets there, or what it is very minimal. And everybody's been looking forward to getting towards the end of the year and having this big market way up in the 20s. We may not even get to 20 anymore, guys, the way this thing's falling off now. And it hadn't been very many weeks ago. A lot of people thought we were going to 130. November feeder cattle down a nickel at 149.92. January down 77 at 145.82. Your fat cattle, a little bit of trade early in the week, enough to kind of spoil your Southern Plains market. 6,400 head through Tuesday, 112 to 114, 179 to 181, which is steady to weak compared to what last week's trade was. I tell you what's really tough out there, and is really making it tough on our cow-calf producers, is this cow and bull market sucks. It's terrible. And it's just another problem that we have. I know guys have been doing everything the same way their dad and their granddad did it every day, but sometimes we got to turn things around, guys. And I preach it all the time, and some people think I'm stupid for it, but we've got to quit having so many cattle or cows calving at the same time. They're all calving late winter, early spring. Everybody works their calves and preg checks their cows at the same time. They bring those cows to the market at the same time. It absolutely floods your cow and bull market. And that's something that's fairly up and up, because you don't have a constant supply for those cow killers. They go out and buy those cows on the open market, but they will feed a handful just to get through the holidays and different times when they need to. But it's the industry's problem when they flood the market with cows. The best cow walking average dress in Oklahoma City on Monday for their cow and bull sale brought 52, but in most sale barns your cows never get out of the 40s. You know, talking to some guys around here local in the Southern Plains, they're buying shortbred cows in the slaughter pen down in the low 40s and maybe even the upper 30s in some cases. It's just cheap. You know, the best bull walker in Oklahoma City brings 73. Them bulls ought to be bringing $1 a pound. But it's really tough, and it all has to do with everybody just wanting to do the same thing all the time. We've got to spread it out a little bit. Your box beef cutout values were sure lower here middle of the week, with choice cuts 218.22 Wednesday afternoon down 54. Selects down 289 at 201.77. Giant choice select spread of $16.50 almost. Slaughters been pretty good so far this week. 357,000. That's 5,000 more than last week and last year. Good at feeder cattle markets. Your real-time index on Cattle Market Central down $2.65 just on Wednesday. Just so many cattle hitting the market. So many of them were calves. So many calves, it's killing the yearling market too, but the yearlings are running out very, very fast, and now we're getting a lot of those big, heavy calves and all the sales that's getting into our index values. But your RTI, real-time index based on an 800-pound steer, 149.08. That's the first time it's been under $150 since Labor Day. And your CME index is always running behind. It's a little up over 150 there, but it's headed in the 140s too, guys. But your biggest OKC West, 11,200 head. Remember I told you guys that the calf run was going to dwarf the yearling run. Well, it sure did. Didn't have 4,000 head of yearlings on Wednesday, but over 7,000 head of calves on Tuesday. but your feeder cattle still $1 to $3 lower. Did note that over 850-pound yearling steers were steady, as those guys can still make those cattle weigh what they want them to in those big carcasses and still get them done with the April board. Calves $2 to $4 lower. Dodge City, Kansas, 3,000 head there. Said there wasn't enough to test the market. 3,000 head. I don't know, a lot of 500 head sales that get tested every week, but I'm not sure what the deal is on that. But calves were lower again, and some of the heifers were sharply lower. If you look at this Cattle Market Central market report that is available here in real time, and you can look at those trends on your weighted average there and decide what you think your trend was there. But they were sure lower, and like I said, sharply lower on some of the popular weights of heifers. Bassett, Nebraska, talk about lower. You know, we always talk about what a premium sale that is. Well, sometimes it has to be lower. When the market's lower, it has to be lower too, and it has farther to fall. 3,700 head in Bassett. Calves over 550 pounds. A lot of them quoted $15 to $17 lower. Ouch. But look, still some monster prices. 89 head of thinner type hard calves there, 630 pounds, bring 180 and a quarter. Don't know where else you could get that. Torrington, Wyoming, 5,500 head there at their big sale. Calves were mixed, mostly lower, as much as $7 lower in a lot of places there, but just a tough market all the way around. Your best calf quote that I saw on lighter weight calves did come out of Bassett also. 80 head, weighed 498 pounds at $185. Remember, we were watching them bounce on either side of $2 a pound there not very long ago, and that's the best quote in the United States on Wednesday. Was those right on the bubble, 500 pounds, $1.85. That's in Bassett. They don't get any better or any higher than right there. El Reno, Oklahoma had the best yearling quote that I saw. 57 head of yearlings in El Reno, 860 pound steers, $158.50. That's your feeder flash for Thursday.